Hey, welcome back to Tuesday Guys Trade Stocks. I'm Dylan,
And I'm Vinny.
and this one's a little bit weird. Bear with us. We're gonna look at if just throwing your money in the Qs or the SPY, which is traditionally what people should be doing. You know, you shouldn't only do single stocks; it should be ETFs also. If that is actually worth it, because we're at a very unique time in our economy that hasn't ever happened, where we have the biggest companies responsible for the biggest gains. So bear with me here. We're just going to take a look at a couple of things. Here's the Qs. This is a pretty sexy chart. This
Yeah.
is a little under 5 years. Okay, little under 5 years. All
Up and
right,
to the right. I like it.
up and to the right. Pretty sexy. We had this little thing below the 200 here, but we've been on a pretty rampaging straight up for a while. Now, here's what's happening that's a little bit weird and also kind of expected in capitalism. All right, what? You ready with this?
Yeah, but obviously, I see the end date on this is like 2015. So I was just curious
Unfortunately.
about the SPAC, episode and how many new publicly traded firms that list leaded to
Well, the
led
good
to.
news is most of those are out of business.
Yeah,
I actually do have a graph on IPOs too. Um,
cool.
so the thing is, now granted, the reason why it starts here is when you go before this, the data is not good. It's very hard to get. For instance, I'm going to reference 1960. The best data I could find is 1,200 companies, which is it's pretty low, but it's also kind of expected, right? There's about 1,000 companies ish before the stock market crash, if that data is accurate. Doing the best I
Okay.
can. So, anyways, we are losing companies after companies over time. That is expected as you get bigger and bigger companies that can just buy other companies. You're going to have
Mm.
less companies, right? It's a little bit harder to start companies in today's environment. Um,
I love it.
this is the number of listed companies for the United States per million people. Now, once again,
Okay.
this ends pretty early. This actually dips more. All
Well,
right. But we're at a point where we're having the least amount of companies per million people since ever,
wow. I
since
mean,
this is being
have you ever
reported.
you've seen Tommy Boy at some point in your life, right?
Yeah. Are you kidding me? I love that movie.
Yeah, you know the line from the Auto Parts King where he's like, "What is American capitalism if you can't buy a few companies, time against a tree, and smash them with a shovel?" Am I right?
That's such a good movie. Um, now, why is this happening? Okay. This only goes up to 2018. There's not a lot of new data on this, but there are less companies. I will say, I agree with you. I'm going to say 2021, we probably had more companies, but it's a longer trend downwards over a span of 40 years. All right. I had to highly doubt 1 year added 10,000 companies. Most of those are electric cars that don't exist. So you can see IPOs versus delistings. The net change has been consistently negative for about 26 years. And then up here is you can see, even though we're having less companies, the market cap total is actually shooting upward, right? Less companies worth significantly more, not a little bit more, significantly more.
So more of a winner take all economy, basically. That's what
Yeah,
this is pointing to.
capitalism,
Yeah.
right? That's kind of how it works. I'm going to shrink your face real quick. Okay. So this is you're looking at public acquirers versus private acquirers for mergers and acquisitions. So basically
Hmm.
all this is saying is merger and acquisition, it was responsible, I should put it in here, but for more than 50% of delistings. Okay.
Makes
Kind of
sense.
expected, right?
Companies get bought. I know of late, like the small cap stocks have been really rallying, and part of the thought process is that potentially with Trump coming into office, the lean economy, the very aggressive FTC chairman would be replaced, and that there would be a kind of a plethora of mergers and acquisitions that could be able to take place now. So you might see this accelerate even more dramatically in
Right.
the next 4 years.
And there's been big mergers just like in the last 12 months. It was like Microsoft and Activision.
Activision,
Yeah.
yeah.
And then what were the other ones?
I
There's a
mean,
couple.
there's like a whole chart of them here, but yeah,
Yeah,
Discovery and AT&T. I mean, that's one
there
that
you
you
go.
see right now. That's kind of getting unwound. Chevron Hess, there's been a major kind of acquisitions throughout the years, and whether or not those have been good for the consumer is a different question. Not getting into this and that in
Right.
this video,
I like how
but
it says it just says
yeah,
Elon Musk instead of a company.
Yeah, yeah, yeah. He is the company. That's a pretty good one. Sweet picture too.
um, so this one is echoing the market cap statement. So this goes back to 1800. Now, granted, you really can't take these companies too seriously because these are like pretty much all railroads. This is it's a
Yeah.
whole different era. But the black is indices United States top company market cap as a percentage of the total, and then top 5 and top 10. So blue is what I would say is the most important here, and you can see we are shooting up. Nvidia, thank you.
Huh.
Right?
Yes.
Okay.
So more of that concentration of market cap is what that's highlighting.
Yeah, and then I just want to zoom in because that chart's over like 200 years, so not great. But you can
Yeah.
see zooming in up till 2022, stock market concentration, it is very, very high. It's higher than it has been since the 1960s. Not common.
Yep.
So if you are a, I personally don't think portfolio like hedge funds are worth it. I think everyone should just do their own thing because you just put in the queues and usually beat them regardless. Um, is the queues actually worth it? Right? One, not as good. Spoiler alert. It is good, to be clear. You're better off doing that than only single stocks, to be very, very upfront and clear. Obviously, this is a sexy, upward swing. I
From
figured I should throw
a
Nancy
standpoint of
Pelosi in here.
yeah,
Huh?
I would say, or there's a ETF that's just FANG stocks, I believe, too,
Yeah.
right? If you really want to like just own the Mag 7 and completely, short circuit that entire thing. But man, I don't know if I could sleep at night. It's tough.
So the risk of that is you can miss out on your NVIDIA, right? Because NVIDIA, I don't think was a top 10 Qs in weight 5 years ago. I think it
Hmm.
was getting there, but it wasn't there. But let's play a little game. Let's just see what happens here. All right. So 5 years ago to the day, if you had invested $1,000 in each of the top weighted companies in the Qs, which I have listed on the left hand side, okay, 1,000. So that's equal weight across. All right. The Qs aren't exactly equal weight, but we're going to do equal weight across.
Mm-hmm.
That's 10 grand total. You would have made $63,000 by now.
Wow.
If you had done the Qs, you would have made $25,500.
Huh.
Substantial difference. Okay.
Yeah. Yeah. It's
Now,
crazy.
NVIDIA is a tough one. This is very abnormal. I'm going to throw out NVIDIA. I'm also going to throw out, if I'm looking at this, if I'm Vinny, and I was going to do the strategy, would I look at Tesla and be like, I'm going to do it? No, you would not. So I threw out Tesla for you too. So, right. So let's say
Yeah.
you had
Fair. Yeah.
$8,000. 8,000. So you did 8,000 the Qs, you get 20,373. If you did 8,000 everything but these two, 23,000. You still beat it.
Wow.
Kind of wild, right?
That's Yeah, I mean, hey, it's interesting because, like, on one hand, I get that the rewards are significant, and I get in hindsight that it makes perfect sense. It's just a question of whether or not it really is a structural thing about the game of American capitalism now, and whether or not you can expect it to continue into the future, or if it's just you're cherry picking data and going like, yeah,
Could be.
obviously this is the answer.
Well, so the biggest limitation of this experiment that I was doing is I cannot look at what was the big 10 companies in the Qs in 2019. It's just like not available data. I cannot find it.
Hmm.
Right?
Okay.
If I don't know why they don't have record of that, or I just couldn't find it. I don't know. I also have kids screaming, so that could be part of it.
Yeah.
So if these are different companies, this is not the best way to do this. But when you're in an environment where you're having less and less companies, you're having more and more acquisitions, and the bigger companies are getting bigger,
Hmm.
it's not a bad strategy to just be like, all right, if I already have a bunch of money in the queues and I want to, maybe increase my Google stock a little bit, it's not a bad idea to just throw it into Google, right?
Yeah.
The big caveat here is Google is being threatened to split up. I don't think it's going to happen. If we did a video on that, that's going to take 15 years anyways. But kind of an interesting outcome.
Yeah. Yeah. I don't, it fills me with all sorts of like thoughts and kind of questions. It's just how much of this, like I said, is truly predictable to last into the future. When we
No
look
idea.
at economy, I'm sorry.
No idea. That's where you have the safety of the Qs, right? So is
Yeah.
the risk to reward worth it? You could just do the Qs.
Hmm.
However, if you had picked NVIDIA still had a decent market cap in 2019, by the way. It was still pretty good. Had
Yeah.
you picked it, I mean, that's that 60K option. That's 3x the market, which if you're a hedge fund manager and you're consistently 3xing the market, that like doesn't exist anymore.
Yeah, yeah, that's like Gulf Stream money right there. If you're a hedge
Yeah.
fund manager, it would be flying around everywhere. It's especially when we look at a kind of increasing digital economy and this winner take all kind of system, and then having data being like the true oil of like the next AI
Yeah.
boom. The companies that are large have the most amount of data. Therefore, like they should have that competitive advantage. I mean, I guess there's always opportunity for a disruptor. When we look back at it, like what companies seemed like they were completely solid in their ownership of a certain sector of the economy, and then could completely destroyed.
Intel.
Intel, yes,
Yeah.
that was their own fault. That was
Yeah.
corporate, kind of structure that fell apart there. Or Boeing is another example that we're watching unfold to this day.
Yeah.
It can happen,
Yeah.
but
100%. And if you had just done the 10 stocks, I'm sure, I mean, Intel was not even remotely close for the market cap guidelines here. But I'm sure if I went back to 2000, this would probably be
yeah,
very different. This would be a very different list. It would not
or
work.
like 1995, yeah. I mean,
Well, well, hold on. If Apple and
well,
Amazon might have been on that list, the
in
Qs
2000,
the
no, I'm
Qs are
thinking
young,
more the
unfortunately.
Intel would be on the list in 1995.
Yeah,
They were one of the largest companies in the world at one point in time.
it just would have moved. Oh, now it's
Yeah.
down, I guess. But yeah, it's interesting. I don't know what the right answer is, but it is something to look at. For instance, I am still buying single stocks, and those two that I'm trying to add are Google and Meta. So it does make me feel better that these are on the list and they're doing great. But
Yeah, true.
all
Yeah,
right,
this
guys.
is a really interesting discussion that could be played out for years. But
Yeah.
I look to kind of hear everyone's thoughts down in the comments down below. We'll try to answer as many of these as we can.
Yeah. What's the right thing to do to beat hedge fund dudes? All right, guys.
Catch you
Later.
next one.